Good evening, good evening, good evening. I hope everyone's having a good night. I'm recording this video because I am gonna be busy in the morning. I'm not sure if I'm gonna be able to make a video or not. So I'll have this coming out either tonight or tomorrow in the morning, and you guys can enjoy it in case I'm not around. This is a new altcoin I'm looking at and I'm very interested in. And full disclosure, I have bought this as well as Osmo, as well as the other altcoins that I've made. I've actually bought into them. So, just a heads up. This is called Pyth, and it is very similar to Link. It's an Oracle service, and that is why I'm buying this coin, because more than likely they're going to drop coins to the networks using them as an Oracle service, which is a lot of them. So keep in mind of this coin. It's very new. It's on MEXC, hence why I'm doing a video on it, because you can actually obtain it. Keep in mind that the link to MEXC for our channel affiliate link is in the description of this video below, alongside the affiliate services and the Discord server in case you want to trade or talk to me live. So just get that out of the way right now. Pyth on a weekly time frame, you can see it's actually coming into back into the resistance that it had where it sold off. I'm looking at it as actually a bullish area because it's actually finding support over here around 36 cents. I already drew the fibs out, but I'll turn them on here on daily. Let's go to daily. So in daily, you can see we've actually started making a little triangle consolidation. You could actually see it drawn out by the EMAs here. How ironic is that? By the EMAs of the 55 and the 100, squeezing price action, then price action broke up, and then it's using it as support. And now you're looking at basically sideways consolidation and hopefully the next continuation after this daily close, which is it's 7 p.m. So in another hour, daily candle closes here on the last day of the month. So the new monthly candle will open in about 53 minutes, and more than likely, we could probably look for some upside if we can close above 40 cents. So by the time you get this video, it will be a new daily candle close, and more than likely, I'm hoping for upside continuation into the resistance of 50 cents and higher. Here, let me turn on the EMAs. So I'm looking for worst case scenario if we do get continuation to the downside. I'm looking for 34 cents here to be support moving forward. And underneath 34 cents, I'll look for, I think it's 26 cents as the next area that I'll look to add on to my position. Now, this is a staking coin. You do get interest for holding this stake. Right now, there's an airdrop for people who hold 1,000 of these. So that's about a $400 investment. If you stake $400 of this coin, you can get a coin that's going to be dropping to this network. And then I don't know what the value of that coin is right now, but whatever it is, it's a coin that you don't have to buy if you want to hold it long term in the future. So just be aware that one of the reasons why I'm holding it is because I'm looking for those airdrops. And yeah, I'm looking for it to get into 48 to 55 cents. Since I bought it around here somewhere, 38, 40 cents, I bought everything like in the last few days. So wherever I got it, it doesn't really matter. The point of the matter is that I'm not going to take profit out of this. I'm going to be holding this into the drops. And then where I want the ROI out of my money is going to be from the drops that I get. I'm going to hold my stake, my original into this, and I'll take out my original investment that I put into this coin into the coins that they get. And I'll just be selling half and staking half. I have a very, very degenerate staking strategy where I'm staking one coin, it's giving me a liquidity coin. I'm taking that liquidity coin using another exchange to stake that coin there. I'm borrowing against that liquidity, and I'm basically making a flywheel of borrowing and lending and borrowing and lending and borrowing and lending through a few different platforms. This is very, very degenerate, high risk, but obviously I've done this 3 cycles in a row. So it's like very lucrative if you done properly, and I'm doing it with risk-free money. So if this goes to zero, I'm completely okay. So please do not do this. But yes, I am definitely using um, the applications that these coins are providing to extract as much value out of these networks as I possibly can. And then I'm holding the spot because they are printing money. So why am I gonna kill my goose that's laying the golden egg? I'm gonna collect as many eggs as possible. By the time I do get out of this or care to get out of this investment, it's already a free investment. So in my head, I don't see any reason for me to leave this investment. This thing can go to zero. As long as it keeps doing whatever it's doing, where other networks are using this technology and they're rewarding early adopters of this coin by having people stake on it, that's basically how they're using the liquidity to do their technological, developing work. Well, then, I mean, that's fine. That's what you get to reap the rewards of being an early adopters. That's how I'm looking at this. I'm holding this long term. This coin just came out, so we can't even say, oh, we're bullish or we're bearish. All I can say is you have lower highs right now. You have this little potential bearish. You have this potential head and shoulders that's forming over here. Here's your little shoulder here, you have your head, and you have this Quasimodo shoulder. So one of these things might sweep the liquidity really sharply and quickly to around 30 cents to 26 cents. And over here, if I get my opportunity, I'll be trying to accumulate a position to basically look for it to come back over here to like 57, 60 cents. Around here is where I'm going to be taking if I take any profit, I'll be taking it over here. Now, the only reason I would be abandoning a project is if the devs do something naughty. If I see that there's devs actually selling and dumping on the actual investors, obviously I don't want to be in that project long term. But all these coins that I'm pointing out were given to the community who staked originally. They were given it for free. So they have no reason to sell. And if they themselves are staking and they're being rewarded, compoundingly rewarded for their loyalty to this ecosystem of this network of this blockchain, then, you know, that it is what it is. You guys have to take your trading thesis and just know that there's multiple ways I'm making money on this trade. One, I'm scalping it. I'm looking for DCA long spot position. Two, I'm making interest on this while I'm holding this and DCAing at a good entry nowish. So when it does get an uptrend, I don't really care where it goes to because I'm not looking to ROI on the spot. I just don't want my spot being negative. But if it's negative, I'm automatically DCAing into the position through my drip investment, which I'm getting paid in the interest automatically into the wallet. And then as this goes up, you can sell the interest or just let that compound. But when you get the airdrops, you can ROI on that. And then if you are getting 1x or 2x on this entry, so if I get this at 48 cents and it goes to $1.50, if I want to take half of my position out, I can. But this is a great example like Tau. I did BitSensor, a video on BitSensor, TAO is it TAO is the ticker, a few videos ago. That I bought at $240. It's already at 400 something. So that already gave me 100% gain in spot without using any leverage. The thing is on MEXC. I could have gone 100x leverage like I normally do. I didn't. I bought spot because I'm doing so much research on all these other projects. I don't have time to manage over leverage positions. Spot, I don't even have to look at. So that thing already 100x. I mean, 100% gain. That already 1x. And that's just spot. So that is already a free coin for me. My allocation in that now is officially free. Taking my original money out and I put it into Kajira and I put it into Pyth and I put it into Chihuahua. So those are other networks that you guys should be looking at, and I will be making videos soon. Chihuahua, the ticker is HAUHAU. Kajira is another network. It's KIJU, I think is the ticker. I will verify that for the video. And I bought Pyth right here. And I actually already had Pyth, but I added on to it. Pyth is on the Solana network, and then the other coin we did was on Atom Network, Cosmos. Both coins are two of the projects that I'm buying and holding long term. So I have Cosmos, Atom, I have Solana, Sol, and then I have these little chains in between their networks that are acting like Oracle services like Chainlink and layer twos like uh, there's other chains that are layer twos, like how EigenLayer is coming out for Ethereum stakers. So right now there's a lot of stuff going on, guys. My head's in the clouds with all the projects, but at least I wanted to drop this video, and then the next video I'll drop will be either a follow-up of Bitcoin and ETH from what we had already drawn out and concluded. I'll give you a follow-up on those, or I will give you another coin like Hawawa or Kujira. We just did a video, but here is Bitcoin real quick. For those of you guys who actually watch the videos all the way to the end, here's Bitcoin, and I think my doodles. There you go. So you see Bitcoin did give you guys this resistance here. We didn't even get the time to play out the grab to 47,500. So now you have to basically understand that this lower high is an actual successful lower high. We're getting that Quasimodo head and shoulders. A liquidity grab on this red path is likely, and that's all that you need to basically prepare for. If it gets to these lower levels, are you going to be a buyer or are you going to be a seller kind of situation? I'll highlight it as orange. It's only underneath this level that we have to concern ourselves with 35,000 and 33 and whatnot. This is basically the targets that I had for like the last month or two. So it's like doesn't really nothing has really occurred yet, but the danger is now on the bulls because you are officially showing me weakness of not being able to even get to that 44,500 level, which we were talking about in the video. You're now playing out the path of the liquidity grab and hurting all the over leveraged longs. And if this gets under 41,500, this will become much more of a realistic drop. That's why you have this little bit of consolidation breathing room. But any opening closes of daily candles underneath 42,500 is a risk of this getting much nastier into the end of the week. And then what you're basically hoping for is the inverse head and shoulder over here to play out and not to break this neckline over here. I don't know if you get, but here's the bullish uh, scenario. The bullish scenario is this inverse head and shoulder. Probably everyone's like, oh, you see this little bit of a neckline right here is where the first shoulder is. This is the neck right here. Here's your other shoulder. You're doing it right now. So that's why you were like, you want to protect this level. As long as that level over there at 42.5 gets protected, the possibility of us just consolidating in this little triangle over here and then breaking to the upside is a possibility due to the fact that we are basically consolidating in a little minor consolidation, but in an uptrend overall. The uptrend is real. This little area is what we're trying to decide on if we're bullish or bearish, and that's why we're consolidating in this little blue zone. The blue zone means absolutely jack shit. It's above the blue zone means we have a bullish opportunity to take the liquidity above this level. And underneath the blue zone, it's a little bit of concern of grabbing liquidity here at 39,000, but understand that people will shit themselves if Bitcoin gets this low. They'll be talking about moon and doom like to zero scenario, but then we'll be looking for how sharp of a liquidity grab we get into these low 30s. So just be aware of that for Bitcoin. I guess I'm doing the freaking recap on it. Here's ETH. And ETH was the weaker one in the last video. If you guys see ETH, we were looking for that rejection because ETH looked like the more of the head and shoulder. And we're like, yeah, it probably won't even get to around 24 or 23 even. I was like, oh, 2300 is going to give it trouble. And that's basically what happened is we got a little bit of tickle at 2300 and you got this nasty rejection straight down. And the level that we had to stay above was 2280, and that's what we're flirting with right now into the daily close. So the daily close right now above 2280 is an ideal situation because then you can open the new candle and then look for us to go break into the higher level. Because this little consolidation right now is playing out this ugly head and shoulder. And I would say that if you get them popped back up, even into this area, I would just use this as a shorting. All right. This area is the danger zone. Stick out. This area, as long as it's under this white line, if it comes anywhere here on this level, it's a shorting opportunity, in my opinion. I'm not looking for us to just break on up and take the highs, but if it occurs in a quick fashion and we stay above like 2,500, cool, we can go to 2,800 and above. But right now, this is basically looking for a deep shark setup, in my opinion, and we're probably going to go hunt all the liquidity all the way down here, and Bitcoin's going to probably go along with it. This thing got saved by Bitcoin yesterday because Bitcoin actually went to like 43.5 where we were looking for the resistance, and this thing went to 2,300 and 2,320-ish. We're basically looking left. It basically went to resistance and just got slapped right. So this is what I'm saying. Like, we're gonna probably be in for a little bit deeper of a grind, maybe like another week or two. But we'll find that out after this weekly close, because Fed really shitted on markets by pausing like ECB. Now Europe and USA are gonna hold steady and not raise rates. Japan is still being negative. So everyone is playing the waiting game to see who folds first. And as one of these economies folds first, then we'll see what's up next. Because until we see like either Japan, I mean, not Japan, yeah, Japan go from negative to zero, we won't see the pressure of bond buying stop until Europe lowers interest rates, until they cut. America can't, because the ECB is already too strong. If they don't cut with their interest rates, like Dixie is gonna mess up, like with Euro forex pairs and all that. I'm not a great forex dude, but I just know good enough that that whole effect of contango, of the correlations that those things have with other assets, is gonna affect other things that even that crypto world doesn't even want to like know or be affected by it. We're gonna go through it because we're also considered a currency. So that currency exchange rate is why we're gonna go through volatility as this uh, interest rates and all this like inflation stuff comes to a nominal like average like area. So anyway, guys, that was a great